Freshworks is has caught global attention of an Indian SaaS company, successfully scaling not just in valuation terms, but also in revenue terms, with very high gross margin and excellent SaaS metrics, even by global standards. And there are many more to come. So I think that's at the capital markets end of the spectrum, you're beginning to see activity. At the growth stage of the spectrum, and we are an example of it, you're beginning to see Series B and Series C activity in companies like Lead Squared, which are growing quite well, have best-in-class SaaS metrics, and are attracting check sizes of anywhere between 30 and 100 million.
Best interest of time, we can begin. So very happy to see the fraternity join in, and hope you're all in good health and are keeping safe. And welcome to the Blue Circle. It's such a big privilege and a pleasure to reconnect with everyone, our distinguished panelists who are handpicked because of the think and the rich experience that they bring in. And thank you to our distinguished audience for joining us again. We've received 100+ registrations, most of whom are senior CEOs, CXOs, and senior leaders. Many of them are our members and are repeat visitors to our webinars, which is very encouraging and motivates us to provide high levels of dialogue through the online channels as well. And for those of you who are new with us today, Blue Circle is the world's first sector-specific networking app specifically for senior leaders that's built in India. We currently focus on 6 sectors currently, which are e-mobility, energy, real estate, healthcare, logistics, aerospace, and defense, and soon adding 14 new sector communities to our platform next week, in fact, to form the Blue Circle 20. We also present socioeconomic insights, which ultimately determine the evolving complexion of the market. Along with our weekly webinar series and our digital publication, you'll be happy to know that we very recently launched the first version of the Blue Circle app for leaders, somewhat like the sector-specific LinkedIn for senior leaders, a space to have meaningful conversations, connect with over 5,000 like-minded senior leaders across India and from other parts of the world as well, house high-quality curated content, and access business opportunities, B2B opportunities across these core sectors. So those leaders among you who are interested, please do join us. I will share the link to the app in the chat section, and we'll soon send out select invitations to our new guests post the webinar. And today, as part of our investment series, we're privileged to have big minds and leading thinkers of the industry to join in for our community's discussion. The topic is Indian SaaS, a $1 trillion opportunity in the next decade. Just in the best interest of time, I will very briefly mention the names and designations of the leaders who've joined us today, and then hand it over to Mr. Raghavan. We have with us Mr. Imran Jafar, Managing Partner, Gaja Capital, and the chair and moderator for this session is Mr. G. Raghavan, Corporate CEO across sectors, Certified Independent Director, and Director Blue Circle. So thank you very much, sirs, for joining in today, and thank you, audience, once again. I now request Mr. Raghavan to please chair and moderate the session.
Thank you, Siddharth. Thank you very much, Imran. It's an honor to have you on our show. And for the audience purpose, let me introduce Imran. Imran Jafar is the managing partner for Gaja Capital. Gaja Capital is India's leading mid-market growth capital firm, which means that basically he gets to support those organizations which need help at the most crucial time of post-seed funding and post-angel funding, and before they get noticed by everybody else. It's a very difficult and challenging part of being a private equity fund for any firm. So Gaja's aim is to help create India's next generation of market leaders in sectors such as education, consumer, financial services, healthcare, and SaaS. I know that during the conversation, Imran will add logistics as well because his interest expands to that as well. Imran has 21 years of experience in private equity, pharmaceuticals, and technology services. Prior to Gaja, Imran worked in a variety of roles of increasing responsibility at Dr. Reddy's as well as Wipro Technologies. At Gaja, Imran leads investments in the education and consumer clusters. He's been closely involved with Gaja's investments in Lead Squared. Imran will be talking a little bit about this particular experience because very, very interesting and fascinating experience. Educational initiatives, Kangaroo Kids, Koo Sports, Sports Village, EuroKids, John Distilleries, CL Educate, and Indus World Schools. You can't get any more diverse than this. Imran has postgraduate degrees in software engineering from BITS Pilani and an MBA from IIM Bangalore. Imran, thank you so much for taking the time to join us on this fireside chat at Blue Circle today. So,
thank you, Raghavan. Happy to be here.
Welcome. Let me break it out right away. You represent a phenomenal variety of experience from across multiple perspectives in the Indian industry. So give me a little bit more dupe about yourself, Imran, the man, the leader who's behind this Gaja Capital.
Thank you, Raghavan. In many ways, my story of, the last 21, 22 years is the story of India and story of Indian entrepreneurship. I started out, I grew up, I was born in Tübingen in Germany, since you'd like to get a little into the personal background. My father's a paleontologist and my mother used to run a kindergarten at home. And so our dinner conversations were really about science and education and children growing up. I grew up in a small town called Lucknow and moved to Bangalore, where I joined St. Joseph's College for my undergrad, and then worked in Wipro Technologies in its formative years, where it was growing at 100% every year from 97 to 2001. Then joined IIM Bangalore, which was an important milestone for me because I met my wife there, Indrani, and I discovered venture capital at IIM Bangalore, which then ended up being my long-term career choice. And after IIM Bangalore, I moved to Dr. Reddy's, which was great. Started out in the CEO's office, and then got exposure to specialty pharmaceuticals, which was their next wave of innovation before I joined Gopal and Ranjit at Gaja Capital 16 years ago. So that's been the story. And underlying the story has been India's GDP growth in 97, growing from $0.4 trillion to nearly $3 trillion now. Consuming households in India going from less than 15 million to over 100 million today. Private equity and venture capital going from less than $2 billion when we started Gaja Capital to now 65 billion on an annualized basis. And subsectors that we focused on at Gaja Capital, like EdTech, moving from being nearly negligible when we started out to now being a top 3 global market. And now SaaS, which is today less than 1% of global SaaS, which we believe will be in excess of 5% of global SaaS over the next decade. So it's been a story of, really about, the multiplier effect of India and Indian entrepreneurship. And I feel fortunate that I was part of, some of these underlying trends.
That's a very interesting chronology, Imran. Thank you so much for sharing with us. Let's talk a little bit about Gaja Capital very briefly. So what has been the focus areas for Gaja Capital? What have been the kind of themes, beliefs, and success stories?
So Gaja Capital, when we started, the driving ambition for us was to be entrepreneurs in private equity. So all of us came together because we loved India. We saw the potential in India. We could live and work anywhere in the world. We chose India because we saw the long-term potential of the country. We saw how private equity and venture capital will be a mainstream asset class and how that will be a force multiplier for entrepreneurship. That was the driving force, to be good investors, to build an institution that will outlast us, and through our work to be a force multiplier for entrepreneurship. Our focus has been for providing growth capital to Indian entrepreneurs. So what has remained consistent for us since 2005 has been focusing on new India as opposed to the traditional India. And we'll talk a little bit about what that means, because with every cycle, with every fund, we've tried to move ahead, look a little ahead of the curve. Second, we chose to work with first generation entrepreneurs as opposed to business families or corporates or corporate divestitures. And third, we chose to be in the scale up as opposed to the startup phase. So we are scale up specialists. What gets us excited is to take a company that has $10 million of revenue and put it firmly on the path to $100 million of revenue, as opposed to the 0 to 1 or the 1 to 10. So that's been consistent over these many cycles of the last 16 years. And we chose to focus on specific sectors. Education, employment, employability is a very important vertical for us from day one. The second was banking and financial services. The third is consumer, and software and healthcare being the other two. So most of our work has been restricted to these sectors, and what you'll see is that a lot of these are growing on the back of domestic demand, but have possibilities of addressing global TAM.
Thank you, Imran. Knowing about you and knowing about Gaja has been the foundation for everything else that we're going to discuss today. Basically, we're going to discuss about the SaaS opportunity, if I can call it as such. One of the most credible reports that that's doing the rounds is one done by Mr. Manav Garg, who's the founder of Eka Software, a good friend of mine. I think you know him as well. One of the reports that they have done with McKinsey's partnership is published by SaaS Boomi, which I think was co-founded by Manav. So basically, if you look at the SaaS market today, there are about 1,000 startups, with 10 of them being unicorns. 6 of them have been unicorns in the last 12 months, believe it or not. And the revenues are in the region of about $2 to $3 billion a year. That's where the run rate right now is. Possibly employs about 40,000 people. Now, the future is what is going to be exciting for this particular topic today. Like you correctly said, if you look at the EdTech market, whoever thought that 10 years ago that the EdTech market in India is going to be so large and is going to be attracting some of the largest investors and is going to be housing some of the largest valued companies in India. I think the reason why we're talking about SaaS is we are looking at a trajectory probably as big, if not bigger, when we look at the opportunities that is available in the horizon. So that's why, Imran, when we talk to you about, can you talk to us a little bit about SaaS and your beliefs? You correctly corrected us saying, let's talk about the 1 trillion opportunity. In fact, in saying so, you kind of alluded to 2 things. One is, it's not about the opportunity in India, it's an opportunity globally, because this is a business which can tap into the global market, and there are no geographical boundaries that we need to be tied into. Therefore, you alluded to the size of the global market and thereby actually set the sights of the Indian players in a global market and not get limited to the domestic market. So whatever the reports are talking about, exactly a lot more than $1 trillion. In fact, they're talking about $1.3 trillion. 1.3 trillion is the market value that one is talking about in 2030, with more than 500,000 employees and with an annual revenue clocking about $50 to $70 billion. And even then, I believe the share of market, like you said, is going to be in the region of 5%. So when you sit back and look at it and saying, hey, how about in 2030, which is only 9 years from now, can't we shoot for a 5% share of market? I think the most simple answer is yes, of course. And when you look at the size of the market, 5% simply translates into $50 to $70 billion of revenue. And it is a humongous revenue, and it's a very significant component. And when it can give employment to about 500,000, if not more people, it's absolutely sounds extremely exciting. So I want to hear your views about what aspects of SaaS are exciting for you, and what are your own personal experiences in investing in SaaS space. And I would like to just hear you talk us through.
Sure. No, thank you, Raghavan. We are believers in a lot of those numbers that you spoke about. And in many ways, no one can see the future, but it's helpful to see, where we could be headed. So the art of the possibility here, not many sectors can claim to be able to unlock $1 trillion of value in a decade. But SaaS clearly can. And now, of course, it's left to innovation, the quality of entrepreneurship, the quality of capital that backs those entrepreneurs, and most importantly, Olympian execution, which is what it will take to be able to unlock that $1 trillion value that we all see in front of us. But in many ways, I think the Indian SaaS story seems like an overnight success, but it's on the back of 20 years of hard work by the government. We mustn't forget, who made it easier for entrepreneurs, to thrive. Maybe in the start.
On this, I have to intervene with a small statement. When the founder of Unicorn was asked, "How did you become an overnight success?" He says, "It was very easy. It just took 6 years for me to become an overnight success." So it's like that.
That's
right. Sorry,
yeah.
Continue. Yeah.
It took nearly 3 decades for India to get there. But I was saying that even, I think what came together for us, the tea leaves that came together for India, were a supportive government. In the beginning, it was just lack of interference that itself, helped. But also, the early innovators and entrepreneurs in the space. I work for Wipro Technology, so I know the work they did, but also Infosys and so many others who came in subsequently. And then, what this created at scale by addressing global markets, challenged by demanding global customers, was this ecosystem where we have one of the largest pools of qualified software engineers in the world. We are now used to working with some of the most demanding, largest companies around the world, and have now discovered that what was earlier a proposition of labor and then a proposition of using labor for productivity now can be an even richer proposition of selling products around the world and addressing problems of companies wherever they might be through the SaaS model. So one perspective on SaaS is that it took nearly 3 decades to get here. The second is just the role of venture capital. Venture capital as an asset class over the last decade have invested $57 billion in India. It's a staggering amount of capital. Venture capital follows innovation. In many ways, if you want to know what the economy will look like a decade from now, you just need to see what the VCs are watching. And the venture capital firms invested a few $100 million a year in SaaS until recently. But during COVID, this number has just sharply increased to nearly $4 billion a year. And I expect this number to be nearly 10% of global investments in SaaS, so $13 to $15 billion a year. And when you start seeing the machine working, where venture capital is investing $13 to $15 billion a year, and growth capital investors like us are now then investing a multiple of that, you'll then see the entire machine working, where you have $10 billion IPOs of the type you saw with Freshworks in global capital markets, to large private deals of a few $100 million, all the way down to seed to Series B, Series C stage. And then that machine starts unlocking the value that we're talking about.
But can I ask you one question, just to interrupt this particular, when it talks about growth capital and private equity coming into this space, is lack of exit opportunities a disincentive? Sitting where you are sitting, how do you look at this?
Yes, so that's what I meant by the machine. The machine works when you have exit at one end and a lot of early stage VC at the other end. When one of these two things are missing, you can't draw a straight line to the $1 trillion aspiration. And what has changed? At this point
of time, it's a little bit balanced in favor of many people willing to do the seed funding and not enough exits. Do you think that will soon enough become a dampener in the inflow of capital for this?
No, I don't think so. In fact, Freshworks is an excellent example, and there are many more IPOs coming up in SaaS over the next 18 months. So you'll start seeing, and that's what I meant by the machine working. Exits are beginning to happen. Freshworks is has caught global attention of an Indian SaaS company successfully scaling, not just in valuation terms, but also in revenue terms, with very high gross margin and excellent SaaS metrics, even by global standards. And there are many more to come. So I think that's at the capital markets end of the spectrum, you're beginning to see activity. At the growth stage of the spectrum, and we are an example of it, you're beginning to see Series B and Series C activity in companies like Lead Squared, which are growing quite well, have best-in-class SaaS metrics, and are attracting check sizes of anywhere between 30 and 100 million. And then you have a lot of the early stage
more about Lead Squared. Can you talk a little bit about Lead Squared? Because I know that you invested in this company and you have a very firm belief in this company. So could you articulate a trajectory as an example? Will it become a Salesforce.com at any time?
No, we believe we are a Salesforce challenger. We have a lot of respect for Salesforce, but we believe we are, a category leader in what we call high velocity sales execution. If you look at the world around us, every sector that you can think of has a digital tech first disruptor. So both the disruptors as well as the disrupted are implementing digital strategies to accelerate the velocity of sales, accelerate the sales cycle, reduce the cost of sales by investing in software. And Lead Squared is a specialized firm focused on sales efficiency. If you look at companies like Salesforce, they work best as a horizontal. In many ways, they're replacing the ERP of a decade ago, and making allowing companies to have an agile cloud-based system that can do many things for the company. In many ways, they want to be the system of record. But sitting on top of these systems of record are specialized apps or specialized applications of the type that we've invested in, which is Lead Squared, that focus and solve a specific problem.
Let me ask you a provocative question, Imran.
Sure.
If you look at the sales cycle, one of the things that has recently got a very high level of boost is the whole sales cycle that you're talking about. Customers are more willing to engage in a sales conversation without having to drink cups of tea with visiting salespeople. And people who are having to make pitches, they can do 8 pitches in a manner of 9 hours, right? So there is something that's really got shaken up during this COVID time. Now, if you look at Lead Squared's work, I think enabling the sales engagement process is an adjacency. Do you think this is something that presents a large opportunity for Lead Squared or anybody getting into this space?
Yes, so Lead Squared, by the way, Lead Squared's success and product market fit predates COVID. So, and that's the point I was trying to make, that, if you look at edtech companies or technology marketplaces or even banks today or broking firms, everyone wants to be a zero dha, or they want to follow that model. Every bank wants to create fintech capability because they look at the startups, around them, and they can see the velocity that they're able to generate. So the point I was making is that you have the startups of Silicon Valley that are blitzscaling and disrupting traditional businesses, but even traditional businesses are now incubating, initiatives that can match the blitzscaling pace of innovation they see in the startup world. And the good news is companies like Lead Squared, because they focus on the sales function, they're finding product market fit with both the disruptors as well as the disrupted. And essentially what they're doing is they're allowing these companies to solve for high velocity of sales, millions of transactions a month instead of a few hundred a year, and accelerate their sales cycle and lower the cost of sales. And I think this is a structural trend. Over the next decade, you'll see many companies like Lead Squared coming in and biting at specific functions within organizations to offer them a very sharp ROI on what those companies need in their specific verticals.
Do you think some of the unlisted companies which are currently in the unicorn club in SaaS are getting to be listed soon?
Oh, absolutely. I think in the next 18 months, you'll see many SaaS listings from India. And Freshworks has given us a good precedent. And there'll be some IPOs in India as well.
Yeah. So can I ask you to make some guesses as to who are going to go to the market?
I won't be able to share names because I can. Like I said, I can speak somewhat intelligently about Lead Square because we're investors there, and we know we're not tapping capital markets anytime soon. We have a lot more growth left.
All right, fair enough. I didn't expect you to answer that question really. Okay, let's talk a little bit about specifically developer tools-based opportunities in SaaS. So I'm told that this can be one very large opportunity because India houses probably one of the largest materially significant developers community in the country. So SaaS applications which are facilitating development tools are likely to be attracting a lot of investment. Is there any view that you have about this?
Well, absolutely. I think increasing developer velocity is a very important goal for all SaaS companies. And in fact, the interesting thing is there's some interesting innovation of SaaS companies servicing SaaS companies. Because SaaS companies at the end of the day are software companies, and these are high growth, well-funded software companies that intrinsically deal with a lot of data and a lot of software for their own operations. And I know of a few interesting companies that are just trying to make sure that these various tools that are used within these companies come together through seamless API integrations, through data integrity, so that they can squeeze out more efficiency. But absolutely, I agree that this could be a big opportunity.
One of the things I've always felt in an accelerated growth for any industry in the country has certainly been, of course, in terms of investment support. I think hearing from you and looking at the comfort with which you're articulating about the inflow of funds for supporting SaaS-based businesses, to me, it looks like that will become less of an issue if there is a good, compelling business case and a growth there. But one of the things the founders of SaaS-based companies in the country, at least until recently, have been blamed for, just as if you remember decades ago, India used to be blamed for not having enough product companies, right? So one of the things that is being kind of blamed is that the guys who are setting into SaaS-based businesses are not really big believers. I mean, they are not really looking at the global market. They're not putting enough investments. They're not right-sizing the engine. Their view is not, the global market. Everything that, if you look at the software development industry, is far ahead in that game. But when it comes to SaaS, because the mindset is a hybrid between a product mindset and a services mindset, it's somewhere in between. So people are saying that. What is your opinion about the mindset of SaaS-based companies in the country to look at the globe as a market and right-size the engine of effort going into tap into the market? What do you have to say about it?
I absolutely agree with that. I think what will hold us back from this $1 trillion aspiration is exactly this. This is what we need to get past. The McKinsey study that you referred to earlier in the talk talks about how Indian SaaS entrepreneurs underspend their US counterparts by a factor of 2. So US SaaS companies that are growing well are spending 40 to 60% of their revenues on marketing. The Indian counterparts barely touch 20%. So, on the other hand, Indian SaaS companies are far more frugal and capital efficient. To get to the same $10 million or $20 million of ARR, they've consumed far less. So in many ways, their strength has become their weakness. They're good at conserving capital. They're good at squeezing out high LTV to CAC. They have best-in-class net revenue retention. But what they are perhaps not as good as their US counterparts are on spending capital to get back growth. And so we'll have to learn this, and it's a completely different skill set to conserve capital and create a high quality business with best-in-class SaaS metrics is very different from using capital productively to scale and deliver higher growth, especially tapping into global TAM. Now, this could mean a few things. When the rubber hits the road, this means the willingness for founders to relocate to the largest SaaS market in the world, which is the US. This would mean a greater openness for Indian founders to hire professionals, senior professionals that have seen larger scale in India and in global markets, and to give them autonomy and capital and empowerment for them to be able to unlock more value. This could mean that the technology and product teams work seamlessly with markets around the world so that you're not restricted in your product design and architecture with the needs of your home market, but are truly building products for global markets and global customers. It could mean all of these.
I guess maybe I'm just responding to this in a way that availability of funds and some of the successes like listing in the NASDAQ and big successes financially speaking could perhaps encourage people to say, hey, we got to look at larger size and maybe aim at the globe and look at it. I think the important point also is that SaaS is not monolithic in the sense that the applications, the domains where it can be used, the product characteristics are all so many in variety. Therefore, you're really looking at the world is available for the taking in terms of the slivers that you can take in the SaaS market, right? So I think these things will perhaps encourage. But let me also identify the elephant in the room. I think it is a talent. Let me recollect that if you look at the IT industry, early 80s onwards, there has been a very steady buildup of talent for the IT industry. I worked for NIIT for 9 years. I'm always very proud to look back and say NIIT quietly produced, it's like a factory for talent for the IT industry at the time. I really dread to think if NIIT had not been there, producing several thousands of people qualified to be able to go walk into the job and start performing, I don't know whether the IT industry would have grown as well as it did. I am very openly being biased about the role of NIIT in the IT industry, but I will challenge anybody who challenges that. But that is neither here nor there. But the point I'm trying to say is, if you look at the talent roadmap in the country, there were two things which were happening from early 80s till probably mid 90s. That was the growth of the IT software development industry on the one hand, also the business process outsourcing industry on the side. So both were growing somewhat similarly. The talent requirement for the business process outsourcing was completely different from the kind of talent that you required for the developer community. And that went on, but fast forward some 20 years later, today when you look at it, really what India is doing is at the cutting edge of what technology companies can do. It's no longer a price arbitrage, it's no longer answering calls from an American Express call center. It's a lot more than that. And that is why when the world has turned and become adopting technology like there's no tomorrow, there's so much of technological transformation happening in everything that you see. Now we have hit the peak of talent shortage. Upskilling and reskilling has never been more important. Anybody with any kind of skills is getting picked up, and youngsters today walk into an interview and ask for a salary that we would have hesitated 10 times in asking for in our careers. But that is the reality. I'm very happy for them, but I'm also concerned about the industry. Now, when we talk about SaaS being a 1.3 trillion opportunity, not too far from today, 9 years from today, we're talking about 40,000 becoming more than 500,000 in terms of number of people. Where are these people going to come from? And what are the exact skills that are required for fueling this kind of a growth? Can you talk a little bit about what you think is the the spread of talent that is required? And in your opinion, how is it going to be resolved?
First of all, having given a lot of credit to IT services over the last 30 years, I think now is the time to also say that the skill set in IT services is completely irrelevant for the SaaS world. And it might seem contradictory, but in many ways, what was the IT services pitch? The IT services pitch was, I have average revenue per employee of $50,000 to $60,000 a year. And, while, there were fixed price models and all kinds of, innovations there, at the end of the day, it was cost plus, wasn't it, for the longest time? And so, if you were a Wipro or an Infosys or a TCS, I mean, your game plan was get larger and larger fixed price contracts and get younger and younger engineers to be able to squeeze out margin. And the SaaS model is completely different. The SaaS model is, you're building a product, you have 70, 80% gross margin, you're growing at 70 to 100% a year, you have net revenue retention of 150%. When you have a business like this, you have significantly more leverage on the productivity side to pay top dollar for talent and attract talent from anywhere in the world. And your globe not just becomes your TAM, but it also becomes your, potentially your source for talent, the best talent wherever they might exist. And fortunately, as SaaS is scaling around the world, you're beginning to see innovations on talent as well. You're beginning to see platforms that are supplying engineering talent and allowing them in this remote working world to plug and play from wherever they might be. So my view is that while the talent shortage is real, I don't think we're going to be on the treadmill like our IT services counterparts are going to be. And the real opportunity for SaaS companies is to create value that is market facing. You're not going to a customer and asking them what they want. You have to lead with knowledge of what they want, and you are actually pitching a solution. So it's a completely different conversation that SaaS companies are having with customers. They're going to customers and saying, I know what you need, and I'm the best solution for what you need. And in return, they charge a margin and therefore have significant ability to pay for top talent. That's my view.
Imran, is it also fair that if you took let's say $1 billion revenue in the case of IT services, and you're talking about $1 billion revenue in SaaS-based companies, is it true that the number of people required to pull off $1 billion in the SaaS area will be less than what you require for a similar turnover in a services company?
Absolutely, and in my view, to a factor of 4 or 5 in steady state. So, like I mentioned, if you look at IT services over the last 20 years, other than the currency depreciation that seems to keep giving them this gift of 4 or 5% a year, I mean, the revenue per employee has stayed stagnant roughly in the $50,000 per employee range. And it's not unusual in SaaS companies to see revenue per employee in steady state to be 3 to 4 times this. So it's a very different. So the short answer is yes, far less employees for the same scale of revenue than in IT services.
I want to probe a little bit on this point about the talent required for SaaS is completely different from the talent required for IT services. So what is required? What is the kind of talent that we're looking for?
The biggest change, of course, on the engineering side, you need, I don't feel I'm qualified to tell you how many Python programmers we need or how many React Native programmers we need, or whatever is the latest technology at that time. I think the big difference in DNA is that SaaS companies need to understand their customers intimately because they are showing up as experts as opposed to consultants or companies that will solve a problem that is already spec'd by the customer. You're expected to lead with a spec. So because of that,
are you saying that for a lot more domain expertise is required on the part of the company to be able to advise the company in the adoption of a particular solution?
Yes. In fact, I'm saying the only way to scale SaaS is when you show up as an expert, as opposed to someone who can build something for a client that wants to build, has a spec for what they want to build. And therefore so that's one. One is that you need to really understand your domains really well. The second is essentially you're a software company that is selling in a very digital way. So the kind of capabilities you need are growth marketing, digital marketing, RevOps. RevOps is a big area specific to the software world or the SaaS world. So data analytics, in these companies. So the point I'm making is that since SaaS companies sell to both the disruptors as well as the disrupted, but because they are a software company, they need their architecture, their team design, their organization has to be software first, product led, because their pitch to the disrupted is that I know what it takes for you to withstand the disruption. And my pitch to the disruptor is that I mirror your DNA. So, the only way this will work is if you truly are designed like, blitzscaling startup in Silicon Valley. If you show up as an analog business by team design, it's not going to work.
So let me ask you a question, going back to your day job, basically. From your own, equity, private equity standpoint, you've gone into your fourth round of, fundraising, right? And then is there any, in your mind, have you allocated a certain percentage for SaaS-based companies, or you will play as the opportunities show up?
Yeah, roughly, a fourth of our $400 million fund will be invested in technology and technology-enabled businesses. Nearly 80% will be in the intersection of technology and the sectors that we like. And examples being in education, edtech, in consumer tech, in financial services, fintech, and so on. So I think we see software as a horizontal. It is showing up in various places in our portfolio. So other than core banking, which is an important area of focus for us, nearly 80% of our fund will be in growth tech.
So if you look at specific sectors,
growth stage tech.
So if you look at software as a horizontal, and it gets dropped into certain verticals in terms of industries, is there anything that you take a bigger bet on, whether it's edtech or healthcare or sports? But where would you take a bigger bet on?
We like all of these. And so we already, like I said, there are 2 or 3 things we've decided to specialize on. We will invest in companies that are $10 million in scale and help them get to 100 million. So that's one area by way of focus. The second is we will focus on technology-led or technology-first businesses that have growth stage unit economics. So they are validated unit economics. They're past the startup phase and they've entered the scale-up phase, where they need both capital as well as operational value add from investors like us to help them on that journey. So that's the second. And the third pillar of our strategy is to specialize in sectors. And so we discussed logistics. We have a very exciting company called ExpressBees. But if you look at ExpressBees, at the end of the day, it's a technology-enabled e-commerce fulfillment platform. So it's tech first. Of course, there's a lot of labor involved, but we're feeding off the digital new economy in India. So whatever sector we pick will have these characteristics that I mentioned.
Since you touched upon logistics, I have a question. Really, I find when I scan the environment for the kind of technology plays that are in logistics sector right now, I feel that each one is doing his own thing. I mean, the kind of variety of products that each of the companies is developing is only marginally different from each other. Do you think that space is just waiting for an across-the-board disruption of a SaaS-based application? Because everybody is trying to do a little bit of a tweak here, a little bit of a tweak there, and then call themselves a separately logistics tech company. Do you think now that you are very interested in the sector and you are playing the sector, do you think that sector is waiting for a disruption of significant SaaS that just simply overrides all investors in this space?
I think this disruption is already underway, and companies like ExpressBees are gaining as a result. I mean, it's not like we didn't have logistics companies prior to ExpressBees and a few others that have entered the sector. And what companies like ExpressBees have done very well is they've solved a real physical problem of delivery with a SaaS-like engagement with their clients, where they've completely integrated into their systems, they understand their vocabulary, they understand the service level agreements there, and are able to create a seamless, frictionless experience for their clients. And unlike a few of our other competitors, ExpressBees has gone a step further by serving the long tail of e-commerce as opposed to just focusing on a few large ones.
Imran, it's been an absolutely phenomenal conversation, but I think I cannot be greedy and be asking all the questions. I got a few of our members who have posted a lot of questions. I'm not sure we're going to have time for all of them, but I want to at least get started. So with your permission, I'll just call out a question that has come from Mr. Sonu Nihlani. He's a director of Ayush Developers. Let me just call out the question. His question is, how important do you think would be the role SaaS-based health and wellness startups that focus on integrating medical services into home and work environment? Also at seed funding stage, which are the most appealing attributes that attract investment from firms like yours?
Thank you. This is an excellent question. Let me take the second one first. We are not seed investors. We come in at Series C and companies that are at $10 million or more of revenue. But at the seed stage, I think the most important question that I hear investors ask is what they call the founder market fit. It's almost one step before the product market fit. And it's really about the founders, the team that has an idea, and what evidence do they have in their past that they have the competence and the experience and the pattern recognition required to be able to take that seed capital and convert the idea into a product. So the most important consideration at that stage is founder market fit. I'll talk about healthcare. You asked a question about healthcare. I think SaaS can play a tremendous role. Sorry?
Yes. The question was about healthcare. Please carry on. Yeah.
Yes, and I was saying there's a tremendous opportunity for SaaS companies to play a role in healthcare and the entire ecosystem, whether it is digitizing patient journeys, especially for chronic patients that need long-term, engagement, or whether it is servicing, hospitals or individual doctors to engage with patients and go about their work in a seamless, more productive way. I think that entire sector is ripe for many SaaS companies to grow and scale.
Are there any noteworthy companies right now that comes to your mind which are in the space?
No, I can't think of any immediately.
No problem. Another question I'm going to call out is something that we already talked about in terms of talent. For capturing the huge SaaS opportunity, what are your views on availability of talent for this great opportunity? How do we create the supply of talent for fueling this SaaS revolution? I think in this question, the point about any views that you may have to create the supply side of the talent may be a worthwhile point to answer. The question is asked by the founder of Connections, Mr. Amit Nagar. Please, over to you.
No, Amit, I think I'm glad you're asking that question because, we're not going to get to $1 trillion till we get to the $50 to $70 billion of revenue. And that's not going to happen if you don't have that many trained professionals. And as we discussed during this talk today, the kind of talent that you need in SaaS is very different from the kind of talent that exists in IT services companies. And it's a bit of a generalization, but I suppose you get the drift. And so how do you convert this problem into an opportunity? So if you're an education company or an edtech company or a software bootcamp company, I mean, here is a $1 trillion opportunity for you as well to help build the supply side for the various types of talent that SaaS is going to consume in large numbers over the next decade.
Thank you, Imran. That's a very interesting question, little bit unique question, but I'm going to pose it to you anyway and see if you got anything to say. This is from Umang Sangvi from Ernst & Young. The question is, can you please comment on the effect of RBI's recent circular and recurring payments on the SaaS industry?
Excellent question, Umang. I can understand why RBI is doing this and what they're trying to protect. But if you look at SaaS companies in the US, there's almost minimal, if not an elimination of the physical paper trail of contracting, invoicing, etc. in SaaS. It's completely seamless. Most of them, can sign up. If you're a company, a startup in the US, you can sign up, a SaaS company like HubSpot using your credit card online. 40% of those sales are unassisted. There is no human involved either in the contracting or in the invoicing process. And in India, it's not unusual to see, even with small startups, where your invoicing is paper-based. And now with this regulation, that automation is getting even more difficult to complete. And the other complication, of course, is the entire TDS and the taxation side of things, which makes automation difficult. So the short answer is that in India, we have a unique opportunity where SaaS companies are reducing friction and improving scalability, but in their own business, you continue to see friction. And if we can find a way to remove it, it'll just unlock a lot of the scalability for SaaS companies itself.
Yeah, I guess my own personal opinion about this recent regulation is that I am not sure that there has been enough time given for phasing in of this particular change in recurring payments area. Almost everything that has been done, there's been always a phasing in of that new method of working. We all know income tax returns, they've been postponing forever, and it's gone all the way to December for income tax returns, for example. And there's a lot of time given for people to assimilate the new way of working. Be it as it may, there is another interesting question. I think all of us have been talking more from the investor point of view and from the companies which are going out there with the product on SaaS. But here is an interesting question from Mr. Ranjit Singh, the Director of Strategic Engagements from the company called Infinity Hall. So he's looking at the issue from the user point of view, asking the question, what is the biggest challenge for Indian customer to adopt SaaS product? How do we upscale customer digital readiness for our SaaS product? So it's a question that is asking. I mean, I would, before I turn it over to you, my own view is that I think it's got to be a part of a journey of the customer company, and SaaS happens to be just en route to fulfilling the digital journey. The question really starts from what is the intention vis-a-vis the customer for that company, and what is that we are planning to do in order to make the life of the customer easier to consume your product or services. And therefore, what are the changes in terms of systems that you will do on an online or an offline mode, and what of it can be replaced with a digital technology and therefore SaaS. So it has to fall within that. In my opinion, cases where any kind of digitization has taken time to take off or fail is where there is a force fit issue with respect to that technology in the life of that value chain, in the value chain. Anyway, I will turn the question over to you, Imran. What would you have to say for this?
Right. No, Raghavan, my view is that Indian companies, regardless of who they are, whether you're tech first, digital first or not, the easiest way for you to digitize is to adopt SaaS. It's the cheapest, easiest, fastest way to digitize. We can be sitting and spending a lot of time in boardrooms on 2x2s on what is our digital strategy. Or you can just ask your business heads who have a specific problem to solve to go out there and have 3 SaaS conversations. And that will be your fastest go-to-market on digital. I mean, Lead Squared derives 80% of its revenues from India. And it works not just with technology first companies, but all kinds of companies, banks, insurance companies, retail broking companies, and technology companies. And I would encourage everyone on this call to pick a revenue driver in your business and adopt SaaS that can move the needle for that revenue driver, because that's the easiest way for you to whet your appetite on SaaS and digitize.
That makes a lot of sense, Imran. Thank you. There's another question from Kiran Chopra, Managing Director, Interlinked Dawamandi Private Limited. The question, again, a very interesting question. When there are multiple opportunities and a plethora of talent and participants in the same space, SaaS or another, what is the key criteria for survival? Constant innovation and enhancing customer experience is one part. I think it's preempted us from saying these as the answers. What are the other factors which differentiates a winner from the rest? I think this question is, you should really put on the hat of somebody with 16, 18 years of just this particular fund that you've been managing. And you're probably the best suited to answer this question.
Right. Yeah, I mean, it's a tough one and an easy one. The simplest, if I've understood the question, the question is, if the competitive intensity in a sector increases, how do you continue to grow, and what are the factors for growth? Is that correct?
Yeah, I think that's what I think. I say this is for an entity or an enterprise to be a winner. Yeah.
So, it depends on where you are on your life cycle, but two things specific to SaaS. First of all, it's not a winner take all market. So there's enough space for everyone globally. So, I wouldn't worry about, the fact that you have a lot of SaaS companies, as a factor, here. In general, however, the best path to scalability and success is to keep delivering customer delight. So as long as your customers like what you do and you're solving a real problem, and the closer you are to solving a revenue driver problem in an organization, the more sticky your business as a generalization. But having now said that, the generalized thing, what competitive intensity will force you to do is, where does competitive intensity show up? It typically shows up in pricing, it shows up in your margins, and it shows up in obsolescence. And so the only way to withstand this is to constantly innovate. Product life cycles in SaaS are much shorter than other products. We spoke about Tally in the beginning of this conversation, Raghavan. Now Tally has the luxury to have survived for as long as it did, but a SaaS company should look at their lives in 3 to 5 year cycles. I mean, if you're not ahead of the game, and if you're not investing significantly in your product so that you're always one generation ahead of what your customers need or want, you're going to face existential risk on account of competitive intensity, not just revenue risk or margin, but existential risk.
Great, thanks. I think that does answer the question. Imran, can I take permission from you for another 5 minutes? We are nearly 5 o'clock. There are a couple of more questions, and if you're okay, then we can take another 5 minutes.
Sure. Yeah.
Okay. There's a question from Mr. Jacob Nainan. His question is, how do you value SaaS companies as compared to IT services company? Would it get multiples of valuation?
Yes, so SaaS companies are valued much, much higher on a multiple basis compared to their IT services counterparts. Freshworks was until recently valued at, if I recall, 40 or 45 times revenue. I think it went public at 30 times revenue. It's not unusual for a high growth, high margin company to be valued at 20 or 30 times revenue in SaaS. If you look at valuations in SaaS, I think what's driving valuations are growth. So there's a strong correlation between valuation multiples and growth. There's a strong correlation between net revenue retention, or the visibility of revenue and the recurring nature of revenue, and valuation. These are the third correlation would be to TAM, So the higher the total addressable market, the better the valuation. To my mind, these would be the three most important metrics.
Yeah, I like those points, and I would like to supplement saying that SaaS by very definition is a highly leveraged business, because for every customer dollar, you don't have an equivalent amount of work that goes into creating the product. So what you're really doing is to take what's been created, and the work that needs to be done is on the margin in terms of adoption, implementation, and leveraging the technology that's been developed, the product that's been developed. So that by definition is a leverage, whereas the value created at the hands of the customer is very high, and it is that a share of that value that SaaS companies are able to enjoy. Therefore, by definition, it stands to reason why the multiples will be quite high. Then there is a couple of more questions, which very quick question. These are very specifically to you and your funds, Imran. One is from Akshay Sharma. He says, I'll read both the questions together and then you can answer them together. From Akshay Sharma, who said, Mr. Jafar, how can one invest in your fund? And there is another question. This is from somebody who has not put his name. Besides cash, what's the biggest value that you add to your investee companies? So these are the two questions related specifically to your funds.
Thank you. So Akshay, welcome your interest, and if you can write to me, send me an email after this, we can hop onto a call and discuss your interest in more detail. So thank you for that. Our operational value add with companies is a very important part of how we work. So if you look at a lot of venture capital firms in India, they don't have deep operational capability. Some of them do. At Gaja Capital, over the last 16 years, we built strong operating capabilities. So other than the managing partners, half of our team have 20 or 30 years of operating experience in areas of finance, HR, taxation, and such, functional areas. And we work very closely with our companies to add value. So like I mentioned, one is the aspiration of how do you take a $10 million company and land it at $100 million of run rate. But the second is how do you augment founders and management teams to be able to deliver the value add? And we've chosen to focus on specific functional areas that tend to get deprioritized or ignored, or where companies struggle to hire talent, and essentially offer our operating teams on a fractional basis to these companies to augment those teams and deliver value. So we're very deeply involved with our companies.
Thank you, Imran. I think we have kind of come to the very end of the show. There are a couple of more questions. I apologize to those who have put in those questions that we do not have the time to take it on, but Siddharth will make sure that those questions get fielded to Mr. Imran, and then you will get answers to those questions. Fortunately, there are only a couple of more left. That's fine. So Imran, I would like to request you to give any closing comments you may have. Then I would like to do the wrap up.
Thank you, Raghavan. I really enjoyed the session. And of course, it would have been even better in person, where I could have seen everyone and interacted with everyone. And hopefully someday we'll do that. And if you have any questions, very happy to answer each one. So send it my way. And I hope that each one of you on the call will at the very least be a SaaS customer. Some of you are, running SaaS companies or aspire to build SaaS companies, or if you're in traditional businesses, want to build SaaS divisions in your companies. I think there's enough and more for everyone, and we'll all have to come together to achieve this $1 trillion dream and aspiration. Wish you all the best.
Thank you, Imran. Thank you very much. So I just want to conclude this session just once again by highlighting the significance of today's session, and more importantly, the significance of the business opportunity that we're talking about. From about $2 to $3 billion of revenue today, we're talking about a revenue size of about $50 to $70 billion in not so long away from now, in just 9 years from today. In terms of opportunity for people to work, from a sheer 40,000 or so who are employed by companies in the SaaS based businesses, we're looking at 500,000 and more in the same period of time. We're also talking about valuation of the companies going beyond $1 trillion of valuation at the same time. And to us, as shining examples, just in the last 12 months, there have been companies which have acquired the status of unicorns, just 6 companies just in the last 12 months. And there are about 10 companies in the SaaS space which are with the status of unicorns. COVID-19 has, if anything, accelerated organizations' appetite for digitizing. And it's also changed the way and the preparedness of customers to engage with the companies about their products and services. And it is no longer an odd thing to just have a Zoom call or a Teams call or whatever, and then actually finish the transaction in terms of conversing. I was recently talking to the CEO of a company who had completed acquisition of another company based out of Bangalore. And he said all the conversations took place during COVID and they'd never met each other at all until the very last day of actually sitting together and signing. Only then they knew whether this man is actually tall or short, because in the video conference, you don't get to know those things. So he said, the whole acquisition transaction was completed on this. So the world has gotten completely prepared and ready to do transactions like this. What better environment than this for companies who are in the SaaS delivery method of their product and services? And I think another very important aspect of this is that it is a global business. It's not going to be constrained by geographies any longer. So when you look at the time horizon for the next 9 years, 10 years, there are not so many opportunities which are looking definitively $1 trillion plus opportunity. So we have absolutely not been able to cover all the elements of this opportunity for our audience. But I think having Imran on the show gave us a fantastic insight and perspective from the angles of an observer of the industry for many years, somebody who talks about the industry by writing checks to the industry, and very personal experience of actually being very deeply engaged in a SaaS-based company. So we've had the opportunity to hear Imran. And Imran, you articulated all the questions very clearly in a simple way. And thank you very much once again for your time. Thank you very much for taking the effort to put your thoughts together and give the audience a fantastic value. Thank you very much, Imran. I'm going to turn you over to Siddharth.
Thank you, Raghavan. Very happy to be here.
Thank you. Thank you very much, sirs. Such an insightful and engaging conversation, and an absolute privilege to hear you both. Our guests and I, we've been hooked till the very end and have taken home several nuggets from today's conversation. And I'm also receiving messages from our members as we speak, and I really wish we had more time. And also thank you to our attendees for joining in and for also sharing excellent questions. For those that may not have been addressed due to paucity of time, I will share the relevant ones with the leaders on the panel and request some of their time for it. So along with our weekly webinar series and our publication, we're taking these discussions across our B2B community platform, our conversations and opportunity exchange for leaders across aerospace and defense, logistics, real estate, healthcare, e-mobility and energy, and soon adding 14 new sectors to the kitty. It'll be a pleasure to have you all join in. So thank you very much, sirs, once again. We look forward to having more such discussions in the future, and please stay safe.
Thank you very much.
Thank you. Thanks, Siddharth. Thanks, Raghavan.